What was not to like with Netflix, right, Lucas? This is just like a high bar that's been set by Wall Street, and the company did really well.
Yeah, I think you nailed it with the high bar. Look, there was nothing in the results to dislike. It's not like they beat on any metric by some huge amount, but they beat on everything. I think it's a stock that has doubled over the last year. It's a stock that had been up by 40 to 50% so far this year. And even though it is now the most established and most valuable sort of pure play entertainment company out there, it still has this momentum behind it where people think it has a lot of room to grow. And so by most conventional, P to E ratio metrics, it's overvalued. And so if it only slightly beats, people just aren't as excited.
Netflix does this thing where it basically pre-records its earnings call and then dumps it as a YouTube video. This is what Ted Sarandos had to say on AI.
We remain convinced that AI represents an incredible opportunity to help creators make films and series better, not just cheaper. There are these AI-powered creator tools. So this is real people doing real work with better tools. Our creators are already seeing the benefits in production through pre-visualization and shot planning work, and certainly visual effects.
Lucas, I don't know how much attention the street was really paying to that commentary on AI. There was a lot of focus on the content slate, but did we learn anything new about Netflix's strategy going forward?
Nothing kind of macro high level. Ted has been pretty consistent on his views on AI, which is that it is a tool, it will be used, and it's not just about cost cutting. They think it can make product better. But I think what was new was him talking about using it on a show. Most of these Hollywood companies have been very wary of kind of sharing how they're using AI, unless it's in sort of a gimmicky way, like they're going to de-age someone for a character, or for a movie or show. Nobody gets too worked up about that. But this, along with this Amazon show, House of David, are probably the two highest profile examples, just given how important Netflix and Amazon are to the ecosystem.
Lucas, all over the socials is Stephen Colbert saying that the late show's cancelled. Do we know anything? What are the details here?
Well, we know that the show is going to end in May of next year, and it's not just the Stephen Colbert leaving. The show, The Late Show, which started in, I believe, 1993, will cease to exist. So it's the end of an era in late night television, and there will be a lot of speculation as to what happens next to Jimmy Kimmel's show or to the Tonight Show with Jimmy Fallon. CBS is really trying to position this as a financial decision. I don't think it would surprise anyone to know that ratings for late night shows have gone down. The cost of doing it hasn't gone up or hasn't gone down either. So the profit made from these types of shows is now very slim. Some might even say they don't make money. But it's hard not to believe that there is some political angle to this, given what has happened with the Paramount deal and the Trump administration, but nobody has any hard reporting on that.
I know that was a jump from Netflix earnings to The Late Show, but it's what everyone's talking about right now online. Bloomberg's Lucas Shaw, who leads the Screen Time team, thank you very much. I want to stick with Netflix. Dan Kurnos, Benchmark senior analyst, joins us now. Benchmark currently has a hold on Netflix. What we didn't get into, Lucas, was the ad-supported tier. They're saying that is, in a sort of a revenue contribution terms, is going to double in 2025. But did we learn anything more beyond the financials on how the consumer is engaging with that ad-supported tier, Dan?
Yeah, can I actually just go back to something Lucas said for a second? I think that there was some nits to pick with relation to the report. I mean, if you wanted to be negative on the stock, you would basically say that almost all of the guidance raise came from FX and less from member growth and growth in monetization, particularly in that ad-supported tier that you just mentioned. And in addition, their engagement grew by only 1%, which, while it's been stable for the last 2.5 years, you've had the rest of Hollywood kind of pulling back on content spend. And so why are they not growing their engagement faster as they continue to spend, I think, $18 billion this year, and then growing that a little bit less than revenue going forward? So that's just one point I'd make. On the ad-supported side, yes, I think we did learn a little bit more last night. We learned that retention remains strong. We learned that ad-supported is now more than 50% of new signups. But we also learned later in the call and the callback that their pricing is improving on ad monetization. And so I do think if you wanted to be more positive on the story, you would say, okay, so even if most of the guidance raise came from FX, They still beat on member growth, which we thought would happen going to the print. And they also improved monetization on the ad-supported, which is going to be the long tail of the growth story. And so numbers for 2026 should also then move slightly higher.
There are going to be lots of people watching Bloomberg Tech right now saying, hold on, if Netflix was so good, why is the stock down 5%? And of course, as of last night's close, it was a stock that was up 43%, market cap of 500 billion. And that eclipses, your Disneys and your Warner Brother Discoveries by some distance, right? This is a company, would you say, that's in good health?
I think they're in fantastic health. I mean, they're the king of the streamers, right? You can argue YouTube. And you can argue YouTube monetization. You can argue how much room Netflix has to run. But by almost all engagement metrics, by subscriber metrics, they're dominating the streaming industry. And they're doing it, as opposed to all the rest of the companies that you mentioned, they're doing it profitably and very much so. If anything else, they actually took up their operating margin guidance this year, and it continues to creep higher. And so maybe that's one of the reasons why they're not splashing out more cash on content spend. They're trying to do it in a thoughtful manner, which we saw others do in maybe a less thoughtful manner, and they're trying to dig out of their holes. So Netflix is in terrific position going forward. But as Lucas said, expectations are very elevated.
Dan, what are you watching right now on Netflix, and what are you excited about in the content slate?
Squid Games 3 looks super exciting. The new animated stuff they've got coming out, since we talked about that, really interesting articles out today about how also kids content is leading sort of the retention charge. So very interested to see what they produce, being a Family Guy here. Really interested to see what they produce down slate. But, there are going to be some unique events, fights in the back half of the year. I look forward to those. And then, of course, you've got the NFL Christmas Day games. And who could miss those, right?